And so now it's jumping up. But this is interesting to me. Yes, sir.
It's like this market is crazy. It's just like 40 point in a second. Like, how does this really happens? Like people are just sitting on the sideline, what they say, and just start buying or selling in a second. Like crazy.
A headline
Yeah.
just came out on the Fed thing. He says conditions may warrant interest rate cuts as Fed proceeds carefully. I think that's probably what that comment probably moved the market a little bit, right?
Oh, yeah. I always like to say that if you can adjust at a high level, it's going to give you an edge and you're going to have a ridiculously win rate on almost everything you do because you can adjust at a high level. And so
Brian.
if you don't know how to adjust yet, I encourage you to keep working on it, keep practicing, looking into that adjusting course. Yes, sir.
Yeah, keep in mind that implied vol and one expected move standard deviation is somewhere around 45, almost double from yesterday.
Okay, so that's interesting. That's probably because of I think the Jackson Hole
Yeah, it
is
is.
going on. I don't know if the Fed Chair Powell has talked already. If someone could tell me what time he's supposed to talk, that would be great because that does have an impact on the zero DT trade today. And depending on what he's going to say, the market can go significantly higher, it can go significantly lower. I don't think he's going to say much to spook the market, but obviously the market is anticipating something there, right? So this is the trade here. It's definitely a lot higher than it was yesterday. So I'm going to go with 100 points I'm gonna skew it to the downside. So let's say 62.90. What would that be? That would be on an 8 delta there. And if I did a 20-point wide spread, it'd be something like this. That's giving you 110 right there. And to the upside, you're probably not gonna be able to go that far, but I just say 64.90. That is a 2 delta. So obviously this is really skewed. I'm gonna go to this 6 delta here on the call side, and I'm gonna do a 20-point wide spread. So that's giving us $195 that's a big difference, which is great. So we can move this further. I don't think we're gonna drop a ton regardless. So I think this is really good money opportunity. So I'm gonna move it down, that put side down to the 2270. That's a big move. That's more than 2 times the standard deviation. We're still getting 160 right now. That is nice, really nice. All right, that's still 160 there. I like that. That's a 4 delta. That's way down there. Are we going to fall that much? If we do, I'm still going to be able to adjust out of that. I'm going to go to 2 contracts. I would like to go to 4, but I'm going to be vigilant and just go with 2. And we're going to jump over here because that allowed me to adjust this better with this size account. Let's try it. It did not give it to me. You can see that I got that call side at a 64.70. Are we going to go up 70 points today? Well, we're up a decent amount already. And we're going to go up more than 70 points. That would be basically 100 points today if we go to that 74.70. So I'm going to go with 155 here like we were trying to do before. And I'm going to send that and we got filled right away. I did move up the put side 5 cents. Once again, do not follow this trade. If you haven't went over the course, you're just going to set yourself up for failure because you're going to have some tough days. I like that it's green. I don't think the Fed can say anything to cause the market to go up a ton. So that's why I'm living with this. I mean, 100 points up. Are we going to go up 100 points? 100 points would take us to what, 65? Another 70 points, 64.75 to just say more than that, right? So what was the high on the year? The high on the year was 64.81. We would basically go back to the highs of the year if we do that, right? Just after the Fed talk. So we're at 64.70. So if we go to the highs of the year, we would probably have to adjust this call side maybe 20 points or something like that to be able to win. So we'll see. But I like how it's playing out at this point. We got the markets all up at this time. Dr. Meadows, I've already jumped in.
Oh
And
boy.
yeah, I've jumped in betting that we won't go too much higher, but obviously since I jumped in, we're probably almost a 20 points higher already. So I put that put side significantly far away because betting that would be the issue. So we'll see how it plays out. I think it's a good trade. If I have to adjust that call side, I think probably tops 20 points. We'll see how things go. But I'm gonna put some alerts really quickly, you guys, and we'll see how it goes. So great. I thought we would see this yesterday. Not maybe not this strong, but I thought we would see this yesterday. We didn't see this at all pretty much yesterday. Before we continue with the video, I just want to quickly point out that if you're interested in learning more about the zero DT strategy or any other of the strategies that we teach here at Dorian Trader, you can check out our Dorian Way School. We're going to put the link in the description area. It will help you accelerate your learning process. Thanks for listening. Now back to the video. So the Fed just came out and he said something, right? You can see that my alert hasn't got hit yet. I just love putting myself in a tight situation, don't I? What did I put that alert at? Because that alert didn't go off. 64.55. Okay, that's what I put it at. All right. So in retrospect, obviously I should have moved that that put side sooner. So we're gonna go back to what the lows were yesterday. and we're going to move it there really quickly. You can see volatility is really high right now. So we're going to send that. If this is correct, we're probably not going to get filled because the market is jumping all around. I'm going to put this at 80 cents real quick, see if they give it to me. And they did. So that's beautiful. And so we moved that up, got a little bit more. I'm going to wait until the alert is hit before I make an adjustment. And so the alert is about 4 points away. So you can say, that's not bad. All right, so we got $445 in the trade. That's a lot of premium with two contracts. I like to say 100 for each contract is a good amount. It's a really good amount. So 100,
Sorry, what
yes.
delta did you move the put side?
I moved it to a 10.
Okay.
It's a 10 right now, but I don't know if you're gonna get the same premium, maybe. But let me see. The premium I think I got 80 cents. It's going for more than that right now if you can get filled. We haven't had to make an adjustment, but but the logic behind the move, you guys, was sound, I think. Just thinking that, we're just not gonna jump up that much. I don't know what the Fed has said for the market wants to go up today, obviously, right? 82 points. What did he say?
He just said balance of risks may warrant adjusting the policy.
And so now it's jumping up. But this is interesting to me. Yes, sir.
Means like this market is crazy. It's just like 40 point in a second. Like how does this really happens? Like people are just sitting on the sideline, what they say, and just start buying or selling in a second.
A headline just came out on the Fed thing. He says conditions may warrant interest rate cuts as Fed proceeds carefully. I think that's probably what that comment probably moved the market a little bit, right?
Oh yeah, yeah. I think 70% of the people, the futures market was already saying there were gonna be a interest rate cut in September. We were saying that as well. Like it's the pressure of not doing an interest rate cut is too strong. But
It
we're
looks
pulling
like
back a little bit right now.
Looks like they've made their money and it's coming down again.
Yeah, but I think if we're going to be bullish today, we're going to be bullish today. So it's one of those things that if you adjust that call side a little right now, it might be prudent. And I know that sounds weird, but if you adjust that call side right now, that might be smart. We could jump back up. So I'm going to do a small adjustment. It's 240 if I just move it 5 points right now. I'm going to let it hit the alert. I don't think we're going to have a reversal today in a big way. When I say a reversal, or like a 50% reverse from the highs, don't think that's happening today. So that would be, let's say right now it's 80 points. I don't think we're going to be back to 40 up today. If I get that alert, I'm going to do an aggressive adjustment. And on the put side, I'm saying, yes, sir.
If you wait for the alert, isn't that going to cost you an arm and a leg more to roll it?
Yeah, an alert didn't even go off for some particular reason. It didn't go off because it's already above that alert right now. If it went off, I missed it. That's why you can't depend on the alerts. That's a really high price. That's going to take almost all the money away. But I'm going to adjust this. Let me see. Let me see if it's a fake price. I'm going to put it at 170. See if they'll give it to me. Because that alert didn't go off. I'm just moving it 10 points, you guys. And now it went off. That's weird. So I'm going to put this at 85. Nope. And I'm going to hit this at 95. Wow. What a move. And you can see that giving the market makers are not giving me what I want here right now. So I'm going to put it at 915. All right. So moved it there. And that was 215. So I'm going to say 40 points. We're at 85. 85 divided by 85 divided by 2 is 42.5. So let's say 64.57 minus 40 is 6,400. And that's the 17 delta. If I move this up to the 17 delta, that's not going to give me anything close to what I wanted. So it is.
Where's your call side?
My call side is a lot higher than I want it to be, but I'm going to get all of that monies back by getting aggressive and moving this to 3 contracts. And we're going to hit that now. So 1, 2, 3, 4. They're not giving that to me. I'm going to put it at 20 cents. 1. There we go. I obviously got really, really aggressive on the put side, you guys. And so what happened by doing that, I ended up with more credit than the adjustment, right? So you guys can see I got 511 in it. We only had 4 something before, right? So now we got a little bit more, and I'm able to still move this call side in a big way. because I left myself room to double this call side if I needed to move it more. A second ago, I moved to the 80 strike, the 64. That's what you see on that, the one you were talking about, Gordon. I mean, Drew. I moved to the 6480. But right now, I decided to move from the 6480 to the 6495. And then when I moved to the 6480, I'm trying to go as slow as I can. I only had two contracts on the call side. Then, as you guys can see, we just dropped a decent amount. But I think that's a head fake of just us going up too much. But anyway, I moved, and this is a good chance to adjust. I moved to the 6480, only used two contracts. Then I moved to the 6495, added another contract to be able to do that. But it's still an overall debit because you guys, I had 500 in the trade. I only have 208 in the trade now. But I'm going to get a little of that back because I'm going to bet we're not going back to this 405, which we are already at the 6450. So it's only a 45-point difference. Can we drop back down to there? Absolutely. I'm going to bet that we can't. And so then I'm going to try to get the monies back by getting another 230, something like that here if I add this put side back. But that's how it went down at this point, you guys. So can we drop all the way back? I doubt it. That's going to happen. So I'm gonna still stick with this 6405, and I'm going to put another contract here. That put side is 25 points wide. I did it too fast and didn't look at the price correctly. A rookie mistake. But anyway, we'll live with it for now. Let's jump back over to this really quickly, you guys. I want to point out a couple things that I might do here. The market is showing that it's probably done. It's taking a break for a second before it goes up higher. So if I move the call side the put side, and I just move it up 5 points just to fix what I did wrong, and then add another contract to it like this, and that will give me 175, maybe $200, and I would be maxed with my put side of what I can get. But let's just see what we can get here. It's jumping all around. I would love to get $200. So I'm going to try to put this a little higher, something like that. And let's see if they'll give it to me. So I just put it, I'm moving it to the 18 delta. I just don't think we're going to fall back a lot, but the Fed said what he had to say. The Fed chair said what he had to say. The market likes it. I think it's overdone. I think it's silly to how much we've jumped up for that, but hey, I'll take it. But it seems silly to me. But if we reposition it, you'll see that this is the expected move, this ruler here. So we will be decent on both sides. I'm going to move this put to this 6410. The call is going to be at the 6435. So the put is going to be at an 18 delta. The call is going to be at a 10 delta right now. If those deltas are correct, because sometimes when the market moves like that, the market makers can't get it right. And it's really odd that even the alerts wasn't getting hit. That's why if you guys been on one of the cohorts or something, I say don't depend on the alerts. You have to be looking at your account at least 3 times a day, because the alerts can shoot past it and not get hit, or something can go wrong with the system and it doesn't send you the alert, whatever the case may be. But you guys can see we just jumped back up again a little bit, and so it did not fill me on what I wanted to get filled on. So sometime getting more premium is better, you guys. So I'm going to go even more aggressive, and I'm going to do 3 contracts there, and then I'm going to do one here. That's going to give me what I want if I can get filled, and hit replace order. Come on, give it to me. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Go to 195. It's jumping all around. Come on, come on, come on. Nope. I'm going to give it to me. 190. 1, 2, 3, 4, 5. Not going to give it to me. Going to 185. Not going to give it to me. Going to 180. And if I can't get it at 180, I'm not going to do it. Okay, so there we go. All right, so I just did another adjustment. I know it's weird, but sometimes the days like this, and I'm glad we're doing this on the floor. I'm not glad that you guys, or whoever followed me, is having to, get a baptism of adjusting here. Right now I'm on the call side at the 64.95, 20 points wide. Okay. 64.95. I moved a second ago, Drew, from the 64.05 because I put that on incorrectly, and the market was. I just don't think we're going to fall a ton today, and it's possible, and I have to live with that. But I moved from the 64.05 to the 64.15, and I turned it back into 20 points wide, but I went to 4 contracts. And so by doing that, I was able to get a net credit of about 160, I think. So now if we go back to history here, we're back to we have $369 dollars in the trade again. So more than we originally had, but obviously not as much as we had at one point in the trade. But that's going to happen. So we got 169 in the trade, 4 contracts on the put side, 3 on the call side. If I add another one to the call side, that would take me obviously back to around the a little over 500 on the trade. But I'm leaving that call side alone for now because I think that's going to be the problem side. I'm leaving it alone for now so that if I have to adjust it again, I can add another 4th contract, and that would allow me to go a little further away if that's if possibly. So for example, right now, if I went to move this 10 points and I did 3 contracts, it's going to be 240. That's still less than what we have in the trade, right? Right now we have 369 in the trade. So that would still give us odds to be able to win sometime later in the day. But if I add another contract here, that's going to only drop it down to 160 for the price. And so that's not bad. And if I go to the 6,500, that would only be $50 to move to the 6,500 now. But I won't have any more contracts I can use in this current situation. So I would have to just do a regular roll up and regular ways to be able to deal with the market if the market wants to go to that sexy number of 6,500 today. And if it does that, then that's pretty remarkable because once again, the all-time high, actually 64.81, and that was done on, what was that done? That was on an 8:15. Man, that wasn't even long ago. Man, feels like a long time ago. It's only
Brian,
less than a week ago. That's the trade there. If you look at it here, it's a lot of time to go, you guys. The market's only been open for an hour, and this is the expected move at this point. So if you were putting a trade on right now, TastyTrade is saying the expected move is plus or minus 23. So you got a 68% of the chance it's going to expire within this. Doesn't mean it can't move outside of this on the put side or outside of it on the call side. So we have to see how it plays out. So every time we dip, we go to a new high of the session. So right now the high is 64.86. We're at 64.82, and that is very, very strong.
All right, just one quick question.
Okay.
While you're doing this, do you ever consider just rolling out to like Monday to give the market time to calm down? Because you could probably get, I was looking at another 15 points away without doing a debit on the call side, just by rolling it out to Monday. So do you consider that at all? On a 0.10 in the 7 DTE, we had like that roll away and roll out that we talked about. Is it just
Yeah, so with the 7 DTE, I never consider rolling out, or maybe I shouldn't say never, but it's darn near never until the 0 DT day. And so in this 0 DT trade, I wouldn't consider rolling out until I feel like I don't have odds anymore to still win, right? On this 0 DT. So if I feel like the odds are better for me to win, and that I can still win in this 0 DT, I'm not going to move out. I'm going to win the day. And so in this case, I still feel like I can win today. Doesn't mean I will, but this is how I feel about my adjusting. Right now, I have no doubt I'm going to still win today, but that could change as the day goes on. And if the day goes on, if just like it happened on Wednesday, it just felt like, okay, well, I'm not going to win on this trade anymore on Wednesday. So I had to move it to yesterday, and then we wind up winning yesterday. But yesterday wasn't easy either. So we put ourselves in a tight situation for trying to be too predictive, and we should have just waited until the 9 o'clock time. If we waited for the 9 o'clock time, this trade would be really, really easy. So if Dr. Metals did his normal thing, this trade is going to be really easy today for the most part, unless we have some type of huge reversal. And I'm betting that we've had big reversals almost every day this week, and I'm just saying it's not going to happen today. Doesn't mean it won't, but it's just the market wanted to hear what it heard. And I just don't think we're going to have a 50% reversal from the highs. And if we don't do that, then our put side is going to be okay. If we continue to go up and go past the all-time highs, which is 64.81, then this call side is going to be challenged and maybe even breached if we go to that sexy number today of 6,500. What the Fed said is it warrants that type of move today. I don't think so, but the market it had this kind of negative tone for the last 3 trading sessions. So now people feel like, risk is off again and it's time to move up. I don't know why. It doesn't mean that interest rates are going to go down significantly because of what the Fed does next in September, but the market is forward thinking. So maybe it's thinking sometime in 26, and you can see bonds are going up. All of them are up right now. So that means that interest rates are going down right now, but they're still in that same range that they've been for the last, let's say, 5 months. So, all right. So if we just move it 5 points and we do something like this, that's not too bad. It's only 180. to move it 5 points and take a little pressure off it, and that'll still be 30 points higher, right? Instead of what, 25 points now. And if we move this back up to the 15 here, we do this, what is that? This here, and that would give us a little money. So what is that? About one after fees and commissions. That is about 119. So, and if we move this 5 points right now, if we can, that would cost us 210. So it'd be like a $50, let's say slippage $70 difference. And so that would take us down about $300 in the trade. So that could be smart and still leave that last adjustment for the end. Wow, that's pretty impressive. That's a pretty impressive move. Wow. All right. So I'm going to put this in and see if we can get it for 55 cents. If we can get that for 55 cents, that'd be great. And see if we can move that just 5 points without adding any more additional contracts yet. And I'm trying to see if we get just a little small pullback. I would love to get filled at the 55 cents. That would be cheaper. And so I'm gonna let that sit for a second, because maybe at this hundred mark here we pull back down just a second, and we go from there. So, but that's the scenario at this point. And if we go up and we just roll up the put side, and I just say 50, if we move back down 40 points, so 64.72 minus the 40 will take us to the 64.32. So if I go to this 30 here, once again, do that. It's not a lot of premium there, but 4 contracts to give us, if we can get it for like 50 cents, that would work. So, so we move the call side, and so let's see if we can get the put side for 50 cents. I'm going to move the put side one more time. This is ridiculous, but I'm gonna move it one more time and see if we can get filled. Come on, give me that 50 cents. Give me the 50 cents. 50 cents. You can argue that I should probably go for 45 before they jump back up, but we did that little drop that I thought we could do. And so I'm gonna give it 5 seconds. 1,000, 2, 1,000, 3, 1,000, 4, 1,000, 5, 1,000. It's not giving it to me. It's not gonna give it to me. Uh, come on. All right, so there we go. I'm gonna throw it in Discord really quickly and I'll explain. All right, so this is the trade. What I just did, Drew, is that I rolled away the call side another 5 points just to give us a little bit more cushion, and then rolled up the put side. Did it for a small debit, and so if we go back here and look at the history, you guys, we did that pretty decently, because we still got $348 in the trade, and so but we're only 41 points away on the put side. And on the call side, we are 30 points away. So we're pretty even in each direction now, with the expected move now being the straddle price 22. So we have to kind of sit now and let this wait. We can't move again. I don't think until it forces us to move. And so I'm gonna live with this now. And we can add the call side, and then that would take us back over the 400 mark, and have at least 100 contracts. I mean, $100 per each contract. But I'm not certain that we're done going up yet. And but that would be what, another 30 points. That'd be 130 up today. I got to live with that and just say that we're done going up. I know Professor Sam is saying something else, but what is 2%? So that would be pretty remarkable. So what is that? We were at 100 points down with 63.69. So let's just see, 63.69 plus 2%. That would take us to 64.96. So 2% day, that would definitely give us that. So I'm gonna sell the call side, you guys. I'm gonna collect another $100, and I'm gonna live with that decision. So there we go. And so now I just balanced it out, Drew. I'll throw this in Discord for you really quickly. I just balanced it out. And so the reason why I just gave you my theory is that it's going to help me more to put that in, that we're not going to, if we go 2%, it's going to basically still not be in the money. It's going to be darn near at the money, but I still have another adjustment in my arsenal without adding more contracts. But this is the play here. It's all 20 points wide, you guys. 4 contracts on both sides, 6,500. is the 11 delta right now on the call side. The put side is at a 16 delta at the 64.30. We're pretty even in both directions. We're about 41 points away on the put side, and we are about 28 points away on the call side as we just jump back up. So I'm going to live with that decision of adding that fourth one to the call side and see if the market kind of settles down being up 100 points. So because right now we are two standard deviations, Professor Sam, with two standard deviations of what was the price when you pointed out to me this morning. I think it was at 48 or something like that.
Guys, I have a quick question. Usually when you're doing the zero DTEs, how long are we gonna hold it for? Are we gonna hold it to like 3 o'clock or?
So I normally try to get in and out of it within 2 hours, but that's not going to be the case today. I try to get out of it then by 3 o'clock Eastern time, which is the witching hour when the witching hour starts. So I would love to be out of it no later than that, but it all depends on if the market kind of settles down. And if it settles down, which I anticipate it's going to get its range or where it wants to be here soon. And maybe it's 105, maybe it's 110, and it stays there for a little bit before it goes up higher. So at this point, I've adjusted a ton. So what I normally do when I've adjusted a lot, I have $444 in the trade. I normally will exit the trade at that point if I can get back to that even. So and so if I go here and I put this zero DT trade here so you guys can see it, and then you can see that right now this is the great thing about having premium, you guys, is that it's the net lick right now for this trade is $880. So I only need about 50% of this to break even, and then I'm out of the trade. This is how I keep that 95 plus win rate because the market has made me adjust more than I like. If I have to adjust more, three or more times, I go for break even. And so that's what I did yesterday. I got a tiny bit more than break even. And today that's going to be the key unless the market moves so fast that it lets me get way more than break even. But that's the key. I still have a really good chance to get out of this trade without being, punished for my predictions. But we'll see, right? We'll see how it plays out. Because if the market drops a ton, that's going to make it more challenging. If it keeps going up, it's going to be less challenging for me, in my opinion. This up move here, I anticipate it's going to start to slow down, but we keep kind of hitting new highs. The high is on the ES at 64.92. We are at 2 points away from that. The SPX, which we are trading, the high is 64.75. We are just 1 point below that. So we keep hitting new highs, which is just amazing. And the put side hasn't been threatened at all. I want to point out to you guys that the trade that we have on that zero DT trade, it's getting close to break even here. The market kind of fell back under 100 a little bit. I think this is just a pause. Unfortunately, the put side is gaining a little bit more premium. So we're still about, let's just say $200 away, a little less than $200 away now of being able to get out. We have 444 in the trade. It's going for about 600. So we'll see how it plays out. But it looks like we should, unless the market just falls apart, and I don't think that's going to be the case. It looks like we should be able to get out of the trade for at least a break even. And so we'll see how it plays out here in a second. So anyway, this is that zero DT trade, you guys. We're about to get out of it any second now with the break even. And I'm going to take that because I do anticipate the market to do some type of big move, because it's been settled. It's been relaxed so much. So we're very, very close of getting out of the trade. So let me just show you guys. Let me say, what is the working order? Do I have the working order in? Come on, Mr. Woods. If you don't have the working order in, you're just idiot. I don't think I have the working order in. Wow. Come on. Come on, dude. You're a rookie. All right. So let me see. 105 is 132. How much do we have in the trade? We have 144, 444 in the trade. So this would be the break even. I messed that up. I don't know if we hit that already or not, but we were definitely very, very close, as you guys can see. And sometime I would say this is semantics, but I'm going to wait until it hits the 105. I don't think it ever hit the 105, so I don't think it hit the 105, so maybe I didn't miss the opportunity. But I thought I had the working order in, and obviously I didn't. So that's that. Buying it back is 432. We have in the trade here 444. So I can't buy it back for anything more than that 105 price here, or it will be a loss. Okay. So I'm going to just let it play out like that, and we'll see how it plays out. I could miss the window if we jump back up, but I'm less worried about the call side now. I think the market has settled down some, but we will see. but it's not just settled down some. It's settled down a lot, right? This is 11 delta. This is a 7 delta now. Premium has come out. But if we jump up too fast, then it will that will change again. If we start dropping too fast, then we won't be able to get to that 105. So we'll see. We'll see how it plays out. For me with zero DT trades, I like to say if I have to adjust 3 or more times, I'm going to get out around break even. And so I've already had to adjust this trade more than 3 times, as you guys remember. And so to me, it's one of those things that okay, it's time to get out. But you guys can tell that I actually think that is if we could have some risk here because it keeps hovering around that break even, but it won't hit it. And I don't like when that happens because it just won't hit it. But anyway, the point is that I don't want to get out of this because of fear. And because when I put on a trade, I always feel like I'm going to win 100% of the time. And then, as I was saying earlier, guys, before it was almost about to win because we're really close to winning now. I was saying that I thought I would still win. I had no doubt I would still win. And that's because I don't try to go for, I don't try to go for what I originally wanted if I had to adjust too much. Because to me, the market has already told me it's not going to just be a smooth ride. It's already kind of it's going to be a problem day perhaps. And so, can we drop a ton later in the day? Absolutely. Can we jump up and go to 130, like, or go up 130 points a day, like Professor Sam was saying, possibly? Yeah, we can do that. And I don't want to be in a situation where I have to fight it later because I get less, I got less adjusting ability the further the longer the day gets, or as the day gets closer to expiration. But I do like what you're saying, Awanza, and I wanted to do it, but I'm already out now, so
God damn.
I
Thank
wasn't
God.
going to do it. I wasn't
Yeah.
going to do it anyway, but I
Hey,
want to
Open.
get to that point, Awanza, that I do it, but I still have to keep the rules of when do I say I'm out? Because only time I lose on this trade, you guys, and this is God's truth, is during the witching hour. So I want to be out before then, and yeah, I could have still probably did that with what Awanza said, but I just don't like that we could have a big move still
Ryan.